So look, what do we got? We got 20 minutes. Okay, let's quickly go down the line and just give me the real brief version of who the heck are you, just so the audience knows. So name, rank, serial number.
Yeah, okay. Well, my name is Da Vinci Jeremy. Actually, my full name is Leonardo Da Vinci Stephen Jeremy. And yeah, my parents were drunk. But anyways, I was born in Trinidad, raised in Canada, and spent 8 years in Chile. And I'm mostly famous because I told people to buy Bitcoin when it was only $1. Also, I became famous because of a video in 2013. I said, hey, just spend $1 worth of your money in Bitcoin, right? You won't regret it because it will be the money of the future. I've been doing YouTube videos and talking about Bitcoin, cryptocurrencies ever since. And yeah, and I also, I'm a software developer since I was like 11 years old, so.
Yeah, hello everyone. Pleasure to be here today. My name is Andrew. I'm the head of global business development at B2 Broker. So we're effectively liquidity technology provider for spot business, margin business, building exchanges, building brokerages, empowering them with our technology. The company, I would say we're doing that for more than a decade, of course. So yeah, my part here is to maybe somehow light you with service provider or liquidity provider insights on that topic.
I'm James. I've got around 200,000 followers across socials. James Crypto Guru on YouTube. I'm the founder of Magicraft, a play-to-earn game. $MCRT. I got into crypto 2012, mining Bitcoin. Very passionate about the space. Want to push Bitcoin and cryptocurrency. That's why I built Magicraft as a play-to-earn game, because I think that's what's going to make it go mainstream. I also have an AI project called ChatGod, which is like an AI assistant. And yeah, which is beautiful.
Fantastic. Okay, now the topic, is crypto facing a liquidity crisis? I'm going to tease that out. What does that even mean? What does liquidity crisis mean in the context of crypto and the different segments of crypto? Well, let's challenge the question and kind of dig into it. Da Vinci.
What is a liquidity crisis, right? Basically, you run out of money. So that is a liquidity crisis for a business. If you don't have any money, you've got a liquidity crisis. That means you don't got any cash. So how does that context translate to Bitcoin? Well, I'm not sure if that works with Bitcoin and cryptocurrencies, because the liquidity comes from the banking system. Banking system, you could print money when you borrow it. And so since Bitcoin is an asset that has an actual value, and the banks can lend you money against your Bitcoin, I'm not sure where the liquidity crisis is coming from.
Okay, so you just sort of kind of recap that. So in your explanation, that concept of liquidity is inherently tied to that concept of really cash flow. When you don't have enough current assets to pay your bills, you have a liquidity crisis, I think you're saying.
It means you're broke.
Well, are you broke or you're just not liquid?
Okay, yeah, if you can't, let's just say, your liabilities are greater than your assets, and let's just say, oh, well, you mark to model your asset. Like, for example, I marked to model my Bitcoin at $3 million. Well, then I'm rich, right? It's called mark to fantasy, I call that. That's what banks do. They mark their assets to model, not to market. And so if you need money right away, you can say, well, I can't sell my assets right now because then then I'm going to lose money and I won't be able to pay all of my debts. So I can't count that. So it's really I'm just going to mark it to what it's really worth, not what the market says is worth. And so I call that mark to fantasy. And if you can't sell the asset for what you believe it is, you can only sell it to what the market says it is, then that's the price, and that means you are broke, basically, right? If you have to sell it, and you have to sell it in order to cover your liabilities, and you can't, and then that selling of that asset does not cover your liabilities, you're broke.
Okay, great point. So Andrew, let me come to you. I mean, what struck me about the Silicon Valley Bank debacle is they weren't really, as I saw it, their liabilities didn't far outseed their assets. It seemed more like a timing issue and a market pressure issue. And then, of course, and someone made a really interesting point. I said this online. when there were bank runs in the past, when people were panicking, they would have to get up, take a shower, put on their clothing, take a car or a horse, go to the bank, wait in line one by one, and take out their money. And so there was time to react, and there was time to solve maybe liquidity issues. But Silicon Valley Bank collapsed at the speed of Facebook. I'm dating myself with this Facebook business.
It was the same though. They had a line, people withdrawing their money. It's just the ones that are left without, like the ones that withdrew first got their money. The ones that didn't, like, withdrew late and they didn't have enough assets or enough liquid capital to pay out the depositors, they're the ones that lost their money. So it was the same as the time as the was.
Here's what I'm wondering about that. Their bonds, if held to maturity, would have been sellable at face value. Because interest rates were going up and the bonds were at a lower interest rate, they had a lower market price, right? That affected the new ratios that banks have to deal with since 2008. But I'm not quite sure that Silicon Valley Bank did not have the funds to pay its debts when due. Absent a run.
It has, like, on paper, they have a lot of money. That's the point of liquidity, like, crisis, right? On paper, like, on the balance sheet, they have a lot of money. But actual liquidity, money available to pay out, they didn't have. That was the problem. And I think crypto is experiencing this right now. Bitcoin is not. Bitcoin and Ethereum, like the main ones, there's a lot of volume coming in. We have almost all-time high volume on Bitcoin. It's still a lot of money flowing in it. But in the entire crypto space, like a lot of the altcoins, a lot of people think they have a massive valuation in their portfolios. But if you actually try to sell your altcoin, if you have a large amount of money in, say, like some top 500 coin, and you try to sell it, it looks like you have a lot of money. But if you try to sell it, the price will tank because there's not enough liquidity. And I think a lot of projects are also running out of burn rate. Like Magicraft, we well capitalized. We raised in the bull market, so we have quite a bit of capital and we have long burn rates. But I know personally that a lot of projects that raised after the bull market or didn't raise enough are running out of burn rate, running out of liquidity now.
Look, if you keep, I have to get to Andrew, but if you keep all your assets in cash or Bitcoin, you'll never have a liquidity crisis because the thing you're going to pay your debts with is that cash. You don't have to liquidate another asset to get to that cash, but you're also missing out on a lot by just keeping it generally cash. So, hold on, Andrew.
Yeah. By the way, you're absolutely right with that. If you're holding any sort of cryptos in actual cryptos, there might not be liquidity crisis in that sense. And speaking about the recent events in the Silicon Bank, right, or like what has happened. If we're speaking about the banks, that's more or less traditional finance, right? Not really. Yes, this bank may be really crypto-friendly, crypto-oriented, but it doesn't mean it correlates with crypto anyhow. And if we're speaking about the crypto crisis in general, if you've seen the latest statistics for yesterday, if I'm not mistaken, there were more than 20,500 plus Bitcoins inflow derivatives exchange in general. It means that people are still like very interested in that. And how can we speak about the crisis if the capitalization just recently hit trillion? Yeah, yesterday. And the whole market grew on like 20% or even more. What happens in the sense of the finance, right, with the bank where the USDC used to be like holding their funds, so on and so forth? Yes, of course. But does it really correlate with the crypto effectively? Yes, crypto is still a bit dependent on the traditional finance and a bit dependent on the current situation in the economy, geopolitical events, so on and so forth. But does it really mean that crypto is facing a crisis? From my perspective, I wouldn't say so. Anyway, crypto may be facing different challenges just due to the immaturity on the market, due to the lack of regulation in some places, or so on and so forth. But it's going to be built, and we can be like, we are seeking or just watching how this new financial sphere will grow and what is going to happen with it, like how it's going to appear by the end of the day.
All right, so let me follow up on that. Obviously, for us in the room, it was interesting news that Silicon Valley Bank was having an issue, but it was personal that USDC depegged. Strangely enough, Tether looked stable and responsible and like a real stable coin. And I remember a few months ago, everyone was mocking Tether. Now we're going for the regulated alternative. What actually happened? What happened there? And what does it say about stablecoin models that one depegged and the other one didn't?
Bank, it's all gone. It's spent. It's bought with spent. They buy it with other assets with that, and then they sell those assets whenever you withdraw. That's why they take forever when you I want to withdraw $100,000 to buy to pay for my private jet. Well, they're gonna delay that, right? So they can take their time to sell another asset.
Fair enough. Now let me, with our time going, gentlemen, I'd like to get your input on the Circle USDC experience. That was very exciting this weekend. Tether and how liquidity plays into this.
If you start a bank run, most banks can't survive. So it's very rare that any financial system can survive a bank run. When everyone panics, for example, SBB, they took $46 billion out in one day. It's like the total amount of assets they had was 250 billion. So it was almost 30% of all money that they have as the entire assets was taken out in one day. And it's obviously the banks aren't going to keep all that money just sitting there doing nothing. So they invest it. So when a bank run starts like that, it can't stop. So USDC had this bank run happen. Everyone panicked. They start bank running it. It drops 20%. Well, I think it was 18% at the peak drop. No, it was 88 cents.
Yeah, 88 cents.
Yeah.
Percent down.
But that was just fear and panic. And then if the government didn't step in and say that they were going to guarantee the bank deposits, then if Circle went down, it would have been very bad for the crypto ecosystem. I think because a lot of DeFi, a lot of DeFi products are built on USDC or pegged to USDC. So when USDC went down, you also saw USDD go down. You saw DAI go down because they're holding USDC, like they're holding multiple stable coins.
So you two were saying something slightly different. Did USDC recover because it has the cash available to redeem the tokens, or did it recover because the government stepped in and basically guaranteed the deposits?
Well, there was never a problem because they make a lot of money and they only had 10% of the total value in the bank. So from a $36 billion, I think it was $36 billion, they had $3.6 billion in the bank. That went down. So at first the panic was because the bank went down. They thought Circle wouldn't have any of its funds to redeem $1 But then Circle said, it's okay, we only have 10%. After they said that they only had 10% in the bank, they would have been able to redeem because it's unlikely that everyone took out USDC, all of it. So it was most likely 10% would have been okay to lose and they could have refunded people. But then when the government said we're going to guarantee these deposits, then the price rebounded fully.
I'm going to do speaker privilege to the extent by a minute. Real fast answer. Does what happened with Silicon Valley Bank and USDC, to what extent does that affect DeFi, true DeFi protocols?
From a DeFi perspective, it's a bit debatable topic, to be honest. But in general, right, speaking about stables and mass adoption of the stables coins and in general and worldwide, right, this is where we're going. This is why the central banks are developing the idea of CBDC. That is why everyone is trying to get there and to get somehow involved into it. And yeah, like USD stables in general were sort of not a leverage maybe, but the first step towards mass adoption of the crypto liquidity, mass expansion and development of the crypto liquidity in general for DeFi, CeFi, regardless of that. And still, from a perspective of the liquidity provider in that sense, right? Yes, of course, we may have multiple backup of the backup of the backup, so the liquidity is pretty straightforward, aggregated, so on and so forth. But it's in really, really high demand though. Comparing margin, spot, it's in high demand. And all of the instruments paired with stables and paired with USDC, USDT, they are still more tradable and we can see more volumes coming to them. So the answer is, I guess it's just a matter of time. It's a cycle thing. So the more people will be used to it, the more well-established crypto industry will become in general. This is like the key to success. So there is no...
Da Vinci, 30 seconds, intersection with DeFi.
For a DeFi, whether the liquidity problem when it comes to crypto is basically US dollars going to come into the space. Meaning that, are you able to take your USD and transfer it into the crypto space? The answer is they're choking it off as much as they can in the United States, but that's only the US. You can also do it with dirhams, you could do it with euros, you could do it with Canadian dollars, you could do it with a lot of local currencies. So although there might be a US dollar liquidity crisis, maybe, it's not going to happen worldwide.
James, last word, 30 seconds, DeFi and what happened?
If USDC or USDT goes down, everything will be affected. This is like, everyone knows this. Every project will go down for a long time. Crypto markets will get destroyed. Bitcoin might go up because everyone will panic and move. That's what we saw. Why did Bitcoin pump the last few days? because everyone panicked from the banks and they moved into Bitcoin. And we're going to see more and more of that happening. I think like as more banks go, the whole point of Bitcoin was to defend itself, to defend us against the whole banking financial system. A lot more liquidity will come into the markets, I believe. A lot more money will be coming into the crypto markets as it gets more established.
Perfect. On that note, big round of applause, please, for our wonderful panelists. The room filled up for you guys. It's great.